money laundering is responsible for something like anywhere between 2 to 5% of the global economy. Now, you're talking about a few trillion dollars on an annual basis. If we say that the total money laundering is about, let's say, 3 trillion a year, one of the few things that actually give us a number is the United Nations Office of Drugs and Crime that gives a number for the money laundered funds that have to do with drugs. And they put it at around 700 to 800 billion, right? Which is like 25% of the total amount that's going to be laundered. Like trafficking and of people, etc. Again, a few hundred billion every year. The number one source of laundered funds is white-collar crimes, meaning bribing, tax evasion, etc. And don't forget that in Cyprus, we had the stigma of being money launderers for the Russians and before the Russians for the Serbians, since the late 90s, right? So as a jurisdiction, we had a fair share of, finger pointing and pulling out by our partners in the European Union about facilitating money laundering. So basically, Cyprus fought really, really hard to get over this stigma. Now, was this stigma justified? To an extent, definitely, but not to the extent that we were accused of.
What is the amount of capital? How much in money does one need to set up an EMI, PSP, or an EMI banking entity or a brokerage? And how long will it take? And let's go with the same question. So how long will that apply for the EU in Cyprus and the Middle East? How much money do you need and how long will it take to get approved and get ready to start business?
To start a bank, you need to have a minimum of 5 million euro as a regulatory capital, right? For EMIs, the baseline for an EMI is 350,000. For payment institution, it depends on the amount of services that you're going to be offering, but that's definitely going to be less than 350. For an investment firm, that's going to be dealing on account, that's 750,000 euro. And for an investment firm that's only going to be facilitating transactions of clients' funds, that's 150,000 euros, right? But again, these are only the benchmark.
Welcome to the Financial Frontiers podcast. Remember to subscribe to our YouTube channel, hit that bell icon to get notified when we upload new content. Follow us on Spotify and give us a 5-star rating. It will help the channel, which I hope you love so much. Here we are in the Financial Frontiers. We have a rerun. This is the first time that we've got a rerun of an episode because somewhere along the line our original recording got lost. But these things happen. It happened on you, Yiannos, so kind of a special one.
Breaking new ground.
Yeah,
right?
Breaking new ground. So we've obviously have had a conversation. It was the first that we had. Please, Yiannos, introduce yourself. Tell us who you are, what your background is. This is a conversation around compliance, which is your main background, compliance and regulation, specifically in the Forex industry.
And digital assets.
And digital assets, crypto. Let's dive in. And thank you again for your time.
It was a pleasure. Actually, we had such a good time the first time that it wasn't even like a problem coming for this for the rerun. So my name is Yiannos Ashiotis. I'm from Nicosia. My background is in accounting and finance. I'm a CPA. I did my MBA in international finance. But then somewhere along the way, I kind of took a turn towards providing services that were in relation to compliance. It all started with a new financial reporting requirement called IFRS 9, which was like a groundbreaking thing in financial services reporting. Basically, it kind of changed everything in regards to how financial instruments would need to be reported. And through my role in advising clients on how to implement IFRS 9, which was pretty much a regulatory thing because it had to do with banks and investment firms, I kind of started focusing more on regulatory advisory. I remember back in the day that was about Basel III requirements for banks, corporate governance requirements, anti-money laundering, and so Again, back at the day, I was working with Ernst & Young in the Middle East, so that gave me the opportunity to work a lot with very big clients, and it was something which was very dynamic, was very interesting. And with regulation, I mean, there's no end of it, right? So I guess it was something which there was always in demand, and kind of evolved. I mean, from providing advisory on mainstream financial services and instruments to try and kind of square the circle and provide similar advice for digital assets, decentralized finance, and all of these new things that we see nowadays.
Right. So run us a bit back. How far back does this go? You said you finished as an accountant abroad, and where did you continue from there, and how far back? Because as you mentioned, regulation has changed quite a bit, and it keeps changing over the years. But run us a bit back.
I started in the U.S. So basically, I did my CPA in the United States. I'm a certified public accountant, certified in the United States. Which, I mean, back in the day, I mean, the way that accounting was done in the United States was totally different with the way that accounting was done in the European Union.
So we're talking about 2000?
Yeah, it was like late 90s, beginning of 2000. Came back in Cyprus for a year. Again, late 90s, early 2000s. I left again. I went to Greece. I was working in Greece for quite a few years. Again, not in accounting and finance. I had managerial roles. And then I came back in 2007 in Cyprus, and that was in the summer of 2007. And I came back as a group operations manager, organizations and methods manager for a very large diversified financial services group. And my first basically assignment was to assist the group implement the first uniform financial services regulation in the European Union, which was called MiFID, the Markets in Financial Instruments. The implementation cutoff date was September of 2007. So basically, we had a few months to implement, and that was my first interaction with the regulation. So that goes back, 18 years now, right?
Sure, yeah.
But you know what? I mean, many people confuse the regulation as being a stopper to innovation, right? And basically what I always point out is that what MiFID showed us is that for the first time you had uniform regulation across the European Union that didn't hinder financial services. That was actually the beginning of the forex industry, of the passporting of financial services throughout Europe, right? So that was a catalyst to create all of this demand in cross-border of financial services. So again, I guess it's not about the regulation as such, but it's about the people that you have around you to help you implement it and utilize regulation as an entity.
Yeah, because I mean, if you don't have regulation for any industry, the industry then goes amok, let's call it. It can veer in any kind of direction, and it is an open playing field for different players that have possibly a bad intent. The regulation is very important. It shapes and structures the industry and protects it at the end of the day. I've had quite a few conversations over here with professionals in the industry who have been involved along this process, and starting with the MiFID, which has evolved. Now we have MiFID 2, MiFID 3. MiFID 2. I heard MiFID 3 recently. Is that coming up? Or?
Well, I'm not exactly sure. I'm sure that they're working on different things. I'm not exactly sure, to be honest. I mean, I haven't checked if there's anything in the horizon. The problem with regulation is that it takes for a long time for the European Union to decide on something and then implement it. So even if they're talking about it now, it's something which is not going to be ready to be implemented, for at least 4 or 5 years.
So, when we talk about regulation, there's all these terms that gets thrown out there. So there's MiFID, there's ESMA, there's MiCA, there's...
the acronyms, right?
Yeah. And, one can get lost, especially if you're not in in the actual industry and working on it on a daily basis, one can get really lost. So maybe let's put a bit of clarity around all these terms, and if you can. So and I'll tell you the ones that I can think of. So it's MiCA, and then we have Basel, which I guess is a different framework. I don't know if it's part of MiCA, or you can explain. Basel 3.
Basel 3 is one of the requirements of
the
Basel Committee. Yeah.
All right. We have ESMA, another term thrown out there. We have MiCA, which is a recent one. We have DORA.
It's quite a lot, right?
All these different terms, and please, as best as you can, why don't you give us a bit of clarity around what are all these things?
Okay, so basically you have regulators, right? You have different regulators. At the end of the day, though, everything starts from the European Union, from Brussels. Now, Brussels has implemented different regulators, different regulatory authorities. Now, when we talk about banking and financial services, you have ESMA, which is the European Securities and Markets Authority, which is responsible for financial services firms and regulation in the European Union. You have the EBA, which is the European Banking Authority. Under the EBA, or I could say in parallel with the EBA, you have the ECB, the European Central Bank. And basically, okay, then you have some other international organizations such as IOSCO, which is International Securities Commissions Authorities. So basically, regulators, local regulators, such as SISEC. For example, SISEC is under ESMA. You have the European Securities and Markets Authority, and then you have the national competent authorities, which are the local regulators. So you have the BaFin in France, you have SISEC in Cyprus, Hellenic Capital Markets Commission in Greece, and so on. So you have all of these regulators.
Is BaFin France or Germany?
No, BaFin is Germany. France is the AMF.
Yeah, okay.
Mm-hmm. And the FCA used to be, it still is, but it's not European anymore, for the UK, for example, right?
Yeah.
So basically you have all of these enforcers of the regulation. So regulation comes from the European Union, basically goes to ESMA, and then ESMA produces the draft directives and regulations. Now, the European Union will publish two different types of material, regulation and directives. The difference between the two, in hierarchy, a regulation is higher than a directive. Why? Because a regulation comes from the European Union, take it, implement it as it is. You don't need to pass it through your national legislation, right? GDPR, for example, the General Data Protection Regulation. It's so important, so it has to be effectively implemented the way it is. A directive, on the other hand, for example, the anti-money laundering guidance, which comes from Europe, is a directive. So that needs to be implemented in the national legislation. I don't know if you heard anything about the discussions nowadays in Cyprus about the potential for bypassing the 10,000 euro cash limit restrictions, which is imposed by the European Union directive on anti-money laundering. So there's a big discussion about that, exactly because it's a European Union directive which has been transposed into our national legislation, and you have some people in our parliament that are discussing about just doing their own thing and disregarding basically
the directive,
national law and the directive, which is insane, but we can talk about that later if you want.
Okay. Well, I mean, why not now? So explain why is it insane? Give us some insight there. I mean, I've got my opinions, but I would like to hear yours.
Well, it's insane because, look, I mean, when it comes to anti-money laundering, people get very, very sensitive, right? And money laundering and anti-money laundering have this weird aura about them. You know, they have this mystic ability, right? I mean, when it comes to people talking about money laundering, wow, it's money laundering. What is it? How is it done? Why is it done? And don't forget that in Cyprus, I mean, we had the stigma of being money launderers for the Russians and before the Russians for the Serbians, you know, since the late 90s, right? I mean, so as a jurisdiction, we had a fair share of, finger pointing and calling out by our partners in the European Union about facilitating money laundering. So basically, Cyprus fought really, really hard to get over the stigma. Now, was this stigma justified? To an extent, definitely, but not to the extent that we were accused of. What do I mean? Cyprus is a small place, right? Even if we wanted to, we wouldn't be able to facilitate money laundering to the scale that they accused us of facilitating, right? When you have a banking system which is a few dozen billion, how much money can you launder? I mean, when you're talking about Serbian and Russian money that's laundered, you're talking about hundreds of billions, right? So we didn't have the ability. We would facilitate, perhaps through some structures, through some legal entities, some companies that were registered in Cyprus, but the banking wasn't here. I mean, there was some money that was passing through Cyprus banks, but in any case, I mean, maybe we didn't handle it correctly. Maybe it was a matter of we didn't strategically, tackled it from a PR perspective. It was definitely a lot of things that went wrong back in the day, back in 2013, I believe, right? So Cyprus got the stigma of money laundering, which still haunts us. Even nowadays, I mean, in some jurisdictions, Cyprus still has the stigma of being, a money laundering jurisdiction. Even though nowadays you have 2 European Union entities that were properly penalized and entered into the grey list of the Financial Action Task Force in regards to money laundering. The Financial Action Task Force is a global organization that basically issues the guidance on anti-money laundering and then has a list of the bad guys and of the worst guys, right? So the bad guys are the guys that don't really adhere to the requirements. That's a grey list, or it's a list of jurisdictions with deficiencies. We call it the grey list. It's not really a grey list. And then you have the black list. The black list are the really bad boys. So you have your North Koreas, you have your Syrians, you have Myanmar, you have like really isolated regimes. Now, believe it or not, Malta was in this grey list at some point, which is a European Union country. Bulgaria is currently the grey list, right? But guess what? Cyprus still has a stigma. Yeah. So basically, if you go to a bank in the UK, to the Bulgaria and Cyprus, they're going to say, "Oh, Cyprus has money laundering problems." So if you are in the spotlight for so long, do you really want to go in and change and deviate from what the European Union is asking you to do in regards to transactions in cash? And cash transactions, the limit of 10,000 has been around for quite a few years now, right? So it's not something which is new and we're thinking if we should implement or not. I mean, it's there. It has been a requirement for more than a decade by the Financial Action Task Force and transposed into European Union requirements and transposed into Cyprus legislation. And now we're thinking about playing with that for what? To facilitate transactions in casinos? Well, last time I checked, 99% of the people that enter casinos, or all the people, have bank accounts and debit cards and credit cards, and now they have digital wallets, which I'm sure we're going to talk about later. Yeah. So why do they need the cash? You don't need the cash unless you're up to
something.
So it doesn't really make sense, right? It definitely does not make sense why we would want to do that. Why would you want to allow cash to be transacted in?
So, it's an interesting conversation, this being stigmatized, being labeled as something. And I think it applies generally, right? It applies generally in life. If you've been stigmatized, for whatever reason, and you've changed your act, and this I think even applies as an individual, So I take this even in like my personal life where, my son is being stigmatized with being the disruptor in the class, right? and this is what I tell him, you did. There were one or two scenarios where you crossed the line a little bit more than what you should have. He didn't do anything bad or whatever, but he just got too gets excited. But now he's been stigmatized, and you can do good consistently, but because you've been stigmatized, the minute you step out of line slightly, it's so sensitive that you're disrupting again.
Yeah.
Where other fellow students in the class might be disrupting more than what he is, but because you've been stigmatized, there's an issue there. So I think kind of the same thing, because, Dubai is rampant with all this money coming in. And, let's just also put some, let's take a step back and build a bit of context. Super bad thing, right? We don't want to be involved in any process, in my opinion, that helps illegal funds clear into a system. And this comes in the form of, human trafficking, kidnapping, things, drugs that destroy people's lives, that people are, from whichever part of the world there are, that are making hundreds of millions, somehow have found a loophole in plugging it into the system in a certain way. We don't want to be part of that, right?
No, we definitely don't want to be there. Yeah. But look, don't forget that when people talk about money laundering, and this is one of the things that I have strong opinions, because I'm a trainer on anti-money laundering. Basically, I'm a certified anti-money laundering specialist. So basically, I worked a lot in different jurisdictions. But you have these misconceptions about money laundering. From all of the legal activities, which activity do you believe, in your mind, is the activity that's responsible for the most money that are laundered on an annual basis?
So just my opinion, which I'm completely, so if I had to take one random guess, I'd think a lot of drug money, and human trafficking. I think human trafficking is a big one. So kidnapping, exploiting individuals, shipping them to whatever country for whatever purpose. So I'll say those two: drugs and human trafficking, run by gangs, whatever it is, and charging the normal consumer, right? So that's clean money coming into an illegal system, and then needs to make its way back into the legal. So I don't know if I'm right or wrong. In the macro economic, the macro level, the grand scheme of things, I don't know if it's maybe you're going to give me some surprise statistic here. I'm looking forward to what you're going to respond to, but I think it's those two.
Okay. Well, look, it's estimated, because nobody can know for sure, right, that money laundering is responsible for something like anywhere between 2 to 5% of the global economy, right? Now, you're talking about a few trillion dollars on an annual basis.
Was your question how much?
No. Okay. I'm just going to put things in perspective. So if we say that the total money laundering is about, let's say, 3 trillion a year, one of the few things that actually give us a number is the United Nations Office of Drugs and Crime, that gives a number for the money laundered funds that have to do with drugs, and they put it at around 700 to 800 billion, right? Which is like 25% of the total amount that's going to be laundered. Like trafficking and of people, etc. Again, a few hundred billion every year. The number one source of laundered funds is white-collar crimes, meaning bribing, tax evasion, etc. Now, talking about tax evasion, you're talking about an area where nobody even knows where tax structuring ends and tax evasion begins, right? I'm just going to give you a small example. For decades, Amazon, Google, eBay had their headquarters in Ireland, and they were using the so-called, I hope I'll get the name correct, it was a double Dutch sandwich system to save on taxes in the European Union by setting up companies in the Netherlands, in the US, and in Ireland. And this for many, many years, for more than a decade, that was a proper tax structuring setup. And then all of a sudden, the European Union told them, oh, you know what, this is tax evasion. And forced them. So what I'm saying is that even the concept of money laundering, that in our mind we think that it's clear cut. It's not so clear cut, right? I mean,
I want to have this conversation about tax evasion, right? Because I think there needs to be a conversation around the definition of these terms. And I'll give you my logic, and then let's expand on it. There's a difference between being tax efficient and tax evasion, right? Tax evasion means you're meant to be paying for the tax over here and you're not. You're evading tax. You're meant to be paying for it. But if you're able to, structure your tax setup such that instead of paying what you would have normally paid 40%, you're paying 20%. Is that 20% efficiency regarded as evading tax, or are you just being smart? And I'd like to hear your opinion. I'll give you mine. I think I'll give an example. I'll give you an example, right? Personal income tax, you know what it is. So it goes, in brackets. It goes 20 up to 20,000. There's the exact numbers we won't get into, but just roughly speaking, up to 20,000, 0% tax in terms of salary, personal income. Between 20 and 25, it goes to 20 and 28,000 a year. It goes to 20%, and it goes up until 35%. If I'm earning personal income in revenues that are up to in the lower brackets, then it doesn't make sense to set up any other structure that could help me reduce the amount of taxes that I pay. But if I'm earning in excess of 60,000 a year, for example, and that extra, let's say it's 100, for that 40K, if I record that as personal income tax, I'll be paying 35%. I'm talking about Cyprus now. Whereas if I create a company, a limited company, I'm paying a different kind of tax, corporate tax, and then the dividends comes in 17%. So instead of paying 35, I pay 29 in overall today. That makes sense to me. Why should I not save that 5%? I'm still paying the taxes everywhere that I need to. Am I evading tax, or am I being smart about the taxes?
Okay. In this case, you're being smart about the taxes, right? However, there's a very thin line. There's a lot of subjectivity involved, right? So, for example, there is a new European requirement which is based on the Anti-Tax Avoidance Directive, ATAD 3. There's a lot of directives, right, in the European Union. Mm-hmm. And which basically says that as per DAC 6, the DAC 6, right? This is the requirement. If you're a bank or if you are an accountant, you're obligated to report to the relevant authorities if you see that Yiannos' company is performing any transactions that lack commercial substance. Mm-hmm. Now, what the heck does that mean? I mean, how is the bank responsible for understanding if your transactions are having any commercial substance? So basically, if you do any kind of aggressive tax planning, it needs to be reported. So again, there's a lot of subjectivity involved. I mean, it kind of borders like insanity at some point, because basically you're putting the onus on people that are not probably qualified to do it. But even if they were, I mean, your accountant is responsible to make sure that you're reporting your revenue and your assets and liabilities and so on. I mean, why would they have the liability hanging over their head about reporting your transactions if they have commercial substance? Mm. But again, exactly because I think the regulators understand that there's a lot of subjectivity involved. They try to keep you at bay by creating this atmosphere of fear, right? That you're not going to be performing any weird tax transactions, because they're trying to make sure that they're going to be collecting the taxes, which I'm not a big fan of, because I believe that, at the end of the day, I mean, if you keep, again, clear regulation brings the best results. If you have very clear regulation about what needs to be done, what needs to be taxed, people are going to be paying the taxes and not going to be an issue. Yeah. I mean, let's take the example of Greece, for example, right? You have these weird, very very complicated tax rules, and then you have very high taxes. So most of the people don't want to pay taxes. Whereas in Cyprus, for many years, we had this very simple 10% corporate tax, flat for everyone. People were inclined to start paying their taxes. Even though now, again, I'm afraid that things are starting to deviate, to shift a little bit, which I'm not very comfortable with. But at the end of the day, you create this atmosphere of fear to make sure that people are not going to be abusing. But again, I mean, in the same way that this is done for companies, it could be done for people as well, right? I mean, why wouldn't, just like you said, I mean, why wouldn't someone come and tell you, look, I mean, you're a self-employed person, why do you need to have a company? Isn't that aggressive planning that doesn't have any commercial substance, right? Unless the commercial substance is to save on taxes. So again, there's a lot of inconsistencies, right? And I was actually listening to a podcast this morning, and it was talking about how billionaires, especially in the United States, are saving on money, right? I mean, they had this example of Elon Musk. Basically, he needed $40 billion to buy Twitter, so he didn't want to sell shares of Tesla. So he went to financiers and to banks. He gave us a collateral, the shares of Tesla,
Yes.
right? And basically he took a loan to purchase Twitter, and then basically with the proceeds he will pay back the loan, release the collateral, and then that's a zero tax transaction. So basically he was able to acquire another company, start making money on the other company, and for him it was a zero tax sum. So
what's your opinion of that? What would you regard that? Just, I mean, in terms of, are you saying that he's doing an injustice to the overall purpose of tax, or is he, is it being smart?
I think that things should be put in perspective always, right? I mean, there's a thing in regulation called a risk-based approach, meaning that, which is the total opposite of what the church says. I mean, I guess that's a pretty good analogy, right? The church says that it doesn't matter that you're going to steal €1 or you steal 5 billion euro. I mean, a theft is a theft. I mean, it's binary. It's either a sin or it's not. But I think that in taxation or in regulation, it shouldn't be this way, right? Yes. I mean, things should be proportionate. So basically, if you're asking, and this, I guess this is something that should be done not just for regulation, should be done for everything. I mean, for example, if I'm speeding in the highway and you're asking me to pay €100 in fines, it's not the same for me than it is for a laborer that maybe he's earning €200 a week, right? So things, I think, should be put in brackets. I mean, people's personal income should be absolutely, and people's value and I guess liquidity should be directly related to the taxation or basically to their contribution. I know that sounds a bit...
No, that makes sense.
Socialistic, but...
it makes sense because, I mean, let's take that example. If, a fine for speeding on the highway costs someone 50% of their monthly income, whereas for someone else, it is literally what they would spend in a morning just for fun, and it has 0.0001% impact on their financial status, then it's unfair because the fine there is it exists to stop speeding.
Exactly.
And so what that opens up is the person who's got money can speed, and he doesn't. The law doesn't apply to him. But if it's on a percentage basis, then, if somebody who's, worth 10 times more should pay 1,000 instead of 100 in comparison. So, but then we're getting into that gets complicated, right? How do you even apply that?
It gets, but look, I mean, but to being fair, I'm sure you remember the King Solomon story, right? I mean, two women, they both wanted to have the kid. One gave birth to it, the other one raised it, and each one of them wanted to keep it. So King Solomon said, what's the fair thing to do? Just cut it in half. That's the easy, fair way to do it. So I guess sometimes it's not about the easy solution, right? I mean, sometimes it has to be a little bit more complicated than that. I'm not proclaiming that I have the solution, but again, I mean, going back to the initial theme of regulation, we have this concept of the risk-based approach, and when the regulator approaches things in this specific way, things start becoming a lot clearer for everyone, right? You cannot, for example, the regulator cannot come and say, oh, you know what, for this client that, let's take a Forex company, this client gave you a deposit of 100 euros. I mean, they took a position, they lost all of the money. That was 4 years ago. And basically, you had allowed this client, because it was a low amount, a 24-hour grace period to provide all of his KYC. KYC means customer, know your customer, meaning the passport or the ID and the proof of utility bill for proof of address. So basically, if you think about it, that's a deviation of the anti-money laundering regulation, right? However, I mean, that was 100 euros. I mean, that was something which was done 100 years. Yes. 4 years ago.
Yes.
It shouldn't be such a big thing, such a big finding for the regulator, right? So the regulator, that's the concept of the risk-based approach. It's not the concept of the sin. It's no KYC, it's a sin. Yeah, but it's different.
Right.
It's different for a customer that will have deposited 100,000.
Yes.
And it's different for a customer that will have deposited 100 euros. And on the other hand, you have to take this in perspective of the bigger picture as well. 100,000 for JP Morgan is probably nothing, right? Yeah. But for a smaller firm, that can be a lot. So there's a lot of moving components. Mm-hmm. So basically, everything needs to be considered. And this is the concept of regulation, right? And it should be the concept not just for regulation, but regulation for investment firms, finance companies, taxation, etc. I think there has to be a more customized approach to things, not just ticking boxes. I mean, the problem in this country, not just in this country, the problem everywhere is that you have a lot of people that are willing to just tick boxes and not just put any kind of thought into things and trying to find a way where it's going to be relevant and fair, right? In most situations, at least, right?
As a blanket approach, doesn't always apply in different scenarios. And just going back to that statistic you mentioned with the majority of money laundering happens with white collar activity. So that is like the US aid that they're talking about with all these billions that have come through, and it's not just like where's that money gone? Who's taken that money, and how have they justified it?
That's a good analogy. For example, money laundering is not money going from US aid to, let's say, to a diversity kids program in Iraq, which was actually one of the cases, right? They wanted to create like a Sesame diversity Sesame street themed kids program in Iraq, and they were sending like $10-20 million or something, right? Yes. That's actually not money laundering. Money laundering is when the money goes to that program in Iraq, but instead of using it to develop that program,
they spend it.
They spend it on something else. The moment that happens, that's money laundering, right? But again, I mean, you have to determine, I mean, how that's going to be spent, etc. So the concept of money laundering is when money is not utilized in the way that they should be utilized. It's
because if I take the term money laundering, I always thought of it as you've received money, that you've got money that came in an illegal way. You're not supposed to have it. And you found a way to clean it. And cleaning it means you've masked it with something, you've tagged something on it, and you've put it into the system such that when it gets into the your bank, a legitimate place, it is regarded as taxed money, cleaned money, not from illegal activities. That is my understanding of what money laundering is. I guess that what you've explained is perhaps a just before you actually clean it. So it's come. So in the Sesame Street example, you've received money for a specific purpose, and then the people take that and they start using it for other things. And why go even through the process of recording that money in a personal capacity? Just spend it on whichever organization it's received, come to, and that's it. So the funding came based off of a lie.
Yeah.
In a sense, I guess no laundering has happened. That's just fraud. There was no laundering required, right?
Exactly. So basically, money laundering has 3 stages. You have the integration. You have the placement, which is when the money is entered into the financial system. Then you have the layering, when the money is being worked to make it clean. And then you have the integration, which is the final stage, where the money is basically reintroduced back in a way that they appear to be 100% legit. Now, fraud in that case is a so-called predicate offense. It's a very beautiful Greek word, genousiurgo έγκλημα, which means that the crime that gave birth to the money, right? Now, money existed. I mean, money came for the purpose of developing the Sesame Street thing. Now, the moment that money is not going for that purpose, that specific moment in time, that's a predicate offense. That's a genousiurgo έγκλημα. Now, the moment that money leaves the account of the kids program developer in Iraq to go into another account, that specific moment in time, that's placement. That's fraud and placement at the same time. That's a predicate offense being created, and that's a placement of the money into the financial system. It was in the system before, but now it's entering the system as dirty money. When that director or producer or whatever sends the money to his wife's account or to his cousin's account in the Caymans, that moment, layering begins to happen. You have the process of start cleaning the money. Let's say the money goes around a few times, and then obviously he wants to use the money for his own personal reason. Right? He might not want to use it in Iraq because there's nothing to do with the money there, but maybe he wants to buy a flat in Chelsea, in London, right? So the moment that money goes to his account in London, at Barclays, let's say in London, that's the integration part. So now the money came back. Oh, you know what? The money came from the Caymans. I had a fund there, and basically these are the returns from my fund. So now the money is integrated back. So it's a whole cycle, right? And it's fascinating, actually. There's so many different unique ways so that people have utilized.
And in this example, we also haven't even talked about, which I guess even before the money laundering process, the people with position of power that abuse their position of power, where they approve the release of taxpayers' money, or that doesn't make any sense. Right? Sesame Street in Iraq. I mean, what is the real case there? So approved. How much? 20 million. Sure. Go. What? But why?
No, that might not be right, but that's not necessarily illegal, though, right? I mean, if you have the
but you're abusing your power.
Yes.
I mean, you're abusing your position of power. If you
that Trump issued his own meme coin, right?
So yes.
Yeah. Was that illegal? It was immoral, definitely, but it wasn't illegal. So.
Yes. He's really shaking things up.
He is.
The markets have gone ballistic. Right. So back to regulation. You mentioned. You were you left the US. You
left the US.
You came to Cyprus.
Came to Cyprus for a couple of years and went to Greece. Came back in 2007. In 2000, during that time, I started working as a part-time thing. I was a trainer for, Big Four, Ernst & Young in the Middle East. So when I left the financial services group in 2010, I kind of started doing more with in the Middle East. That pretty much went on until 2018. Came back to Cyprus, for good. Started working for another big advisory / accounting organization. It wasn't a big four, but it was one of the big, I would say, six globally. And that was until 2022, beginning of 23, when I left and I started my own business. So basically, I found some wonderful associates along the way. So we formed GRC Partners. GRC stands for Governance Risk Compliance. So basically, what we wanted to do was to focus on regulatory advisory services. So we set up the company in Cyprus. We set up a branch in Greece, and we set up our, I'm not really going to say mother company, but basically our HQ in the Middle East, in Abu Dhabi. That's a different brand. We call it Pnyx from Lofos to Pnika, which is where in ancient Greece the Athenian citizens will go and basically debate things that had to do with the public matter. And actually, after 2,500 years, if you go to the Pnyx in Athens now, you still see the steps, which is the Vima, which is where the orator, whoever wanted to say something, would just climb up and just stand there and address his fellow citizens, right? So my partner came up with a name, which I found was really interesting, because this is exactly what we want to do. An advisory firm should be outward looking and basically have vision and share its vision and be able to communicate that vision. And through that setup, now we are trying to offer our services again in the Middle East and in the European Union in a variety of sectors, primarily sectors that need regulation, such as financial services, funds, crypto, banking, digital payments, etc. But exactly because the UAE, Dubai, Abu Dhabi, is so dynamic, we're a little bit more agnostic when it comes to the services over there. So we have as a core offering our governance risk compliance and regulatory advisory, but we're also facilitating startups, helping companies with basically help them to enter the Middle East. And we do some other specialized projects such as ESG, environmental related projects. We have some healthcare projects, etc. So we are branching out.
Right. So let's talk about this a bit more. So your Pnyx is in Abu Dhabi, based in Abu Dhabi, and then you have over here GRS. You mentioned GRC,
Governance Risk Compliance Partners.
Governance Risk Compliance Partners, and what is your main activity? Is it around the crypto side, or is it forex, CFD, broker, financial institutions, and why the two entities that way? You touched on it a bit, but if you can maybe understand that a bit more, because you've got the Middle East. You're based in Abu Dhabi. I think that's where the regulator ADGM is.
Yes, exactly.
And so I guess that's why you chose Abu Dhabi. How come have these two? Are you doing some European activity as well as the Middle East?
Okay, that's a great question. Well, basically, it's in Cyprus. Basically, we cater to clients that want to enter the European Union, and usually now with after 2007 at least, right, with MiFID, you have this concept of passporting. So if you have an entity in any European Union country, you can offer your services to the so-called passporting of the services in any other European Union country, right? So you're going to have a company in each different EU jurisdiction. Cyprus is one of the jurisdictions of choice, probably by chance or basically by design. I'm not really an expert, but we're promoting it. We're actively promoting it, not just me. I mean, the whole service industry, we're promoting Cyprus as one of the best jurisdictions in the European Union. Why? Because of the tax setup. I mean, it's pretty favorable. We don't have the lowest, but we have a pretty reasonable tax setup. Everybody speaks English. You have amazing people. I mean, you have amazing professionals. Everybody basically here is educated to the highest levels. And also, you have British common law. right? Which is very, very easy to navigate. So Cyprus is a very good jurisdiction. So we deal a lot with clients that want to come to the European Union offering the services. Most of them would be CFD brokers, so basically investment firms. Some of them will be funds. Nowadays, you also have a lot of crypto companies under MiCA, which is Markets in Crypto Assets. That's a regulation in the European Union for digital assets and crypto assets. And some of them will be in the relation to with payments. So basically electronic money institutions and payment institutions. And exactly because in Cyprus, I mean, we started relatively late. I mean, the company was only formed a couple of years ago. We decided that, this is what we know what to do. We're pretty good at regulatory advisory. We can navigate the regulatory advisory very well. Just to give you an indication, we're the first company probably in the European Union to create a crypto fund back in 2019 when there was no regulation for crypto in the European Union, right? So with the support of SciSec, we kind of took the regulation that was in existence for funds and we kind of,
repurposed it.
Yeah, exactly. We mapped what would be required for digital, for a crypto fund. So we're pretty good at that. I mean, we're pretty good at basically taking the requirements of what needs to get done and basically transform it into a working setup, a regulated setup in the European Union. So we said, look, this is what we know what to do. So we don't need to expand into 50 different things. We know regulation, GRC partners, regulatory advisory. We just do what it says on the box. Governance, risk, compliance, right? So we take companies from A to Z, meaning what kind of strategy you need to implement. I mean, what kind of components do you need to have in your global setup in order to provide these services? And then we're going to get the license for you, and then we're going to help you run the company in a way which is going to keep you away from any trouble with the regulator. So we're going to provide AML support, compliance support, risk management support, etc. In the UAE, though, things are a lot more dynamic. Things are a lot more dynamic. So basically, even though we started off, of the same principles, we realized that, Cypriots are pretty smart, right? I mean, I'm not saying that, other people are stupid, but I definitely think that Cypriots have this unique ability to think outside the box. And having worked with many people from many different countries, I would say that, Cypriots are pretty good at being the jacks of all trade. I mean, exactly because they have the ability to understand. I mean, to put the pieces together. They get it.
Right.
And they get it in a way that not too many people can. I mean, you have other people that have different skills, different abilities, but Cypriots, I think that we're pretty good at, thinking outside the box and making things happen. And I think that's a quality that's definitely needed right now in the Middle East. So finding ourselves there, myself and my partners, we realize that we need to be a little bit more agnostic. We need to put this ability to make things happen into use, right? And basically, this is going to be our niche, that we're going to be an advisory firm, a boutique advisory firm that basically can help people not only navigate regulation, but also navigate different things. They can navigate basically deal making. They can navigate funding. They can navigate supporting an ecosystem of startups and entering new markets. And this is why, the differentiation, this is why effectively we have the two different brands, because the Dubai one is a lot more out there.
Got it. So, let's run through some numbers over here. Give us an indication. What is the amount of capital? How much money does one need to set up an EMI, PSP, or an EMI banking entity, or brokerage, and how long will it take? And let's go with the same question. So how long will that apply? The same questions for the EU in Cyprus, and same question for the Middle East? How much money do you need, and how long will it take to get approved and get ready to start business?
Okay, for any sort of regulated entity, there are baseline capital requirements that are imposed by every regulator, regardless of whether it's based in the EU, in the United States, in the Middle East, etc. Right? Now, for investment firms, this regulatory capital is set there for a variety of reasons. The first reason is to ensure that a company will have the ability to sustain itself financially in a way of and to sustain itself financially in case there is a downturn in the markets, there's something bad might happen. So the company is going to have the ability to unwind its customer affairs in an orderly manner. That's why you have the capital requirements. So exactly because the ability to unwind in an orderly manner has to do with the amount of customers that you have and the amount of money that your customers have with you, capital is a baseline which is going to be given by the regulator. For example, a bank, to start a bank, you need to have a minimum of 5 million euro as a regulatory capital, right? But that's not, if you have 5 million euro in the bank, doesn't mean that the Central Bank of Cyprus is going to allow you to, to operate, or it's going to allow you to get a license. Okay, first of all, if we're talking about banking, most of the decisions are going to be done by the ECB in Frankfurt, not by the Central Bank of Cyprus. So the Central Bank of Cyprus is going to give a recommendation, but because of the centralization, especially in banking, the decisions are going to be made in Germany. But in that case, the central bank is going to have a look at your business plan, and depending on what they see, they're going to ask you to have a lot more than the 5 million. 5 million is the absolute minimum that you need to have in your bank account. But that's not even the absolute minimum, because if on your business plan it says that you're going to be needing 1 million euro in operating expenses for each year of the first 3 years of operation, well, it's only logical that the central bank is going to tell you, look, guys, assume that you're going to have zero revenue in the first 3 years. So, you need to have at least 8, but why only 8? Just to make me feel more comfortable, I think you want to start a bank, which is not a small feat. You know what? I think you should have like 15 million in your bank account, and not just tied up in like properties in London. It has to be relatively liquid, right? Otherwise, why would I allow you? I'm just, asking for trouble. Yeah. So this is the thing, for example, for EMIs. For banks. For EMIs, the baseline for an EMI is 350,000. For payment institution, it depends on the amount of services that you're going to be offering, but that's definitely going to be less than 350. For an investment firm that's going to be dealing on account, that's 750,000 euro. And for an investment firm that's only going to be facilitating transactions of clients' funds, that's 150,000 euros, right? But again, these are only the benchmark. Now, you know what they say about high luxury items? If a customer walks in and they ask how much it costs to buy something, it means that they cannot afford it. It's pretty much the same thing in regulation, right? If you have a customer and he's trying to tell you, oh,
how much do I need?
I need, I have 400, I cannot show. You're like,
no,
dude, because don't forget that when you're acting as a promoter, it means that you vetted your client. If you're going to take a client in front of the regulator, you're effectively...
It's a reflection of your own work, because you almost like you work as a filtration to the regulator, and in theory, what's coming to the regulator from services and businesses like yourself is you've already filtered out the, let's say, not so serious cases.
Or you should have. It doesn't usually happen.
Yeah.
We see a lot that some people will just try and help facilitate. But
do service providers like you have some kind of a performance a standard that you need to maintain with regard to how many you have, how many successful entities that have passed regulation under your...
There were some thoughts actually by the regulators in Cyprus, by the central bank and by SISEC, primarily by SISEC. That was 5-6 years ago. They were thinking about asking promoters to be regulated themselves, but I think that it didn't happen. So no, I mean there is no vetting of the promoters right now, so anyone can be a promoter. Which okay, I mean we have an open market. I'm not promoting that we should have a closed circle of promoters, but I think that one of the reasons that and you asked before about how long it takes, right? And I guess you were referring to the fact that maybe you heard that it takes a long time to get the license,
especially EMI.
Yeah, but I'll tell you a couple of reasons for that. First, there was never a proper way of basically facilitating the licensing, right? I mean, everything was done. Now they changed. Now I know I have first-hand knowledge that the central bank has revamped its licensing department. So this is something which is going to change. But before, you had the licensing department, which was, for example, the same people responsible for the change of a director in the board of Bank of Cyprus, with the same team that would be responsible to take an application and basically examine it to see if it was appropriate. So you didn't have designated people, that would be responsible for the applications. The other problem is that anyone could be a promoter, right? So if I have in my team people that have submitted literally more than 100 applications in different regulators all over the world, and then you have a promoter which is preparing their first application and they just submit it and there's no beginning, there's no end. It's like, it's whatever. And there is no regulatory framework for the central bank or for SASI to tell them, what the hell is this? Just take it back, please. Now and bring it back. But they have to keep it there and basically, and the head of licensing is to assign a resource on that application. Then you know what? Then maybe it's not only the fault of the regulator, right? Maybe someone who should kind of start vetting who the promoters are, just to ensure that there's going to be a streamlining of the application process.
And an efficient backlog of actual applications that actually make sense, as opposed to, a promoter who's just throwing in and adding overhead to the regulator, which is essentially wasting its time. It's like, oh, what is this?
Exactly.
Reject. And what will happen there is if the regulators so overloaded, I think the attention of detail, first of all, the backlog and the delay increases, which then impacts the industry, because then some would-be potential investors in the entity look at that and say, I'll go to another jurisdiction that may be quicker. It impacts it as a product of the country.
Absolutely. But the problem though is that it should be in basically the regulatory framework that the regulator can deny an application. Right now, I don't think that they have the ability to deny an application based on the fact that it's shitty work. Mm-hmm. Excuse my language, but if you have an application which is
going to say it as it is,
that's really badly structured and prepared and compiled, there is no regulatory justification for the regulator to tell them just take it back, just take it. Mm-hmm. They might do it unofficially, but again, they run the risk that if for example the promoter is a lawyer, they can come and sue them, and tell them, look, there's nothing in the law that says that you should have done that. Yeah. You're obligated to just take it, however shit it is, and just review it. That's what the law says, right? So exactly because of these deficiencies in the regulatory framework, they're obligated to just keep it. But if you have, for example, 10 officers that are taking applications and you dump this on them, even if they cannot proceed, they have the quotas of the applications. You cannot give any more work to them. So just like you said, at the end of the day, I guess we need to help the regulators to help out the industry, right?
I guess one natural way of going about this is there's got to be merit. There's got to be accountability that impacts any promoter. If you decided to be a promoter of these entities, if you're putting in applications and you're getting a rejection, that needs to be recorded, I think, and put as a performance indicator on, your ability. And as a result, no serious entity will want to go to you, and then you won't get business, because if you're continuously getting rejections, and then that also, I guess, puts the regulator in a position to prioritize applications and say, well, if Bumble Sponsors Limited has got given 100 applications and we've rejected 70 of them, okay, let's put them in really low priority, because it is, at the end of the day, who can perform the best, who perform well, get to the top, and I guess a merit-based, accountable method, in terms of these entities offering the services, wins. You do well, you'll win. You put an application that's serious, you'll win, and then that has a domino effect in terms of your credibility, and entities that want to work with you because you've got this credibility. I guess that's the way you fix it, in a sense.
You're right, but again, unfortunately, there's a very long delay in the way that these things are done, and the reason is that I know that, for example, if SciSec wants more resources, they have to go to the ministry has to go to the parliament, and basically it takes a long amount of time, right? So basically, if they have a surge of applications now, it's probably going to take them 2 years to hire new people. So it takes a long time. I mean, it's the way that the system is done. I guess there are ways to fix it, but again, it's so complicated. Don't forget that it might sound a bit contentious, but with most of the members of the parliament being lawyers, and lawyers being one of the groups of promoters there, maybe there's no interest in their behalf to revamp the system, right? I don't know. I mean,
so what's the number? I mean, for whatever it is, whatever the status is, good or bad, we've discussed, the potential, the places, the room for improvement, let's call it. But in today's state, how long will it take for these different entities in Cyprus, so for an EMI, given that everything's good?
For an EMI, I would guess no less than 2 years.
EMI, 2 years. Financial services.
Financial services shouldn't take more than 18 months, right? Again, because of the backlog that exists. But again, that's a bit too long, right? I mean, if you ask me, everything should be like 12 months max.
Right.
And even for simpler structures, it shouldn't be more than 12 months, more than 6 months.
Is there a difference between dealing on an account and...
There is. I mean, the thing is, if you think about it, if it's dealing on an account, it means that you have a company which will need to have the systems in place to record its risk positions, because they're going to be dealing on an account, which means that they're going to be playing with their money, but at the same time, they're going to have clients, right? Which means that if anything goes wrong, they could potentially jeopardize their clients' money, which means that they need to have more systems and procedures in place to ensure that this is not going to happen. So effectively, it's a complexity of the application, right? It's a different volume of systems and processes that need to be there.
More requirements to meet, it makes sense. So that by nature will delay a bit more. Okay. And in comparison to the Middle East, so how long will it take to set up and in the Middle East, are you doing all of those? So is it also, brokerage, crypto exchange, or
yes.
Crypto?
Yes, it's just that you have different regulators over there. I mean, the ATGM, the way things are in the UAE, for example, right? In the UAE, you have the Central Bank of the UAE, and you have the Securities and Commission Authority of the UAE. Now, these two are the equivalent central bank and SciSec, let's say, of the UAE. So basically, if you want to be offering services in the UAE, you need to get a license from these two jurisdictions. Now, what is the DIFC and what is the DGM? There's a number of offshore jurisdictions. Now, what's an offshore jurisdiction? An offshore jurisdiction is that you designate a plot of land. Let's say you go to the parking of Rasipi and you say, you know what? I'll designate this an offshore jurisdiction, meaning that it's not going to be under the laws of the Republic of Cyprus. I will create new laws for that jurisdiction. So this is what they did with the DIFC in Dubai, and this is what they did with the DGM in Abu Dhabi. Now remember, the United Arab Emirates are 7 emirates. Dubai is one of them. You have Abu Dhabi, you have Sharjah, you have Al Ain, it's 7 of them. The most important one is not Dubai. It's Abu Dhabi. That's the rich emirate. Dubai is a glitzy one. That's where the the glamorous people go, right?
The only reason the Burj Khalifa exists is because of the bailout they got from Abu Dhabi.
Yeah, they had a different name before, right? And one of the conditions was that we're going to change the name. We're going to pick the name.
It was going to be Burj Dubai.
Burj Dubai, yes.
It was going to be Burj Dubai, but in honor of
the Khalifa. The Caliph. Khalifa is basically the wife of the ruler, right?
Right.
So Abu Dhabi has the money, but Dubai had the vision traditionally, right? I mean, Sheikh Maktoum, which is the current ruler, amazing vision, because if you think about it, every other emirate, I mean, not Dubai, every other of the 6 emirates started from the same position, but basically it was one man's vision that helped to create this thing in the desert, which is amazing. So basically you have different offshore jurisdictions. Now you have Ras Al Khaimah, you have Maidan, you have so many different zones. But the main ones is the DIFC, the Dubai International Financial Center in Dubai, which was created. So basically they designated an area as an offshore zone. They ensure that the legislation in that offshore zone was copied of the British, so common law, which is one of the things that makes Cyprus as a good jurisdiction. And they created new regulation, and they told companies that, look guys, if you want to offer financial services, let's say, or banking services, but not in mainland, right? If you want to offer it anywhere else in the world, come and set up here, right? And then about 6 years ago, Abu Dhabi started realizing that they should create something similar. So they created the ADGM, the Abu Dhabi Global Market, which is effectively copied off the DIFC. Again, British regulation. They even get judges, ex-judges from the UK and take them there, right? All of the regulators are there. So basically you have these offshore zones, and these offshore zones even have their own regulators. You have the DFSA, Dubai Financial Services Authority for the DIFC. You have the FSRA, Financial Services Regulatory Authority, in the DGM. So you have a single regulator that regulates financial services, crypto, banking, insurance, everything from one regulator. Even though for the mainland, you have different regulators, right? So this is how it works right now. Now, why did we choose the ADGM? The ADGM, exactly because it's a newer jurisdiction, it's a little bit more hungry, right? So we had very good connections there, and I think they were a little bit more welcoming, I mean, to a startup like us, exactly because they wanted to bring in new companies. So basically, I guess that they saw something in us, or maybe this is how they treat all of the new companies, but definitely we felt very, very welcome.
Well, I guess they need promoters, right? You're actually promoting the country's products.
Yes, so. Absolutely. So this is how it works over there. So we have the ADGM company, but we're actually going to start the process of setting up a DIFC company as well.
Interesting. So ADGM, Abu Dhabi Global Markets, I like to give a different story. They copied my name, and they just put an A in front. And instead of saying DGM, they just put an A.
Maybe, right? But and how long it takes for them to regulate? Again, it's a risk-based approach. The simpler your setup it is, the faster it's going to be to regulate it. They're a little bit more efficient there, but not because they're harder working than your average Cypriot person. It's because there is no red tape. I mean, if the CEO of the DGM wants to hire 10 people tomorrow, he will hire 10 people tomorrow. No questions asked. Things are getting done, right? There is no red tape whatsoever. And basically, this is how things happen over there. So basically, if you have good leadership, you can do amazing things. Right?
And a lot of money.
Yes. Yeah, of course. No resource constraints and no red tape. That's an amazing combination, right?
Yeah.
Amazing combination. So it will still take, for example, for an investment firm there, it will take about 6 months. For a digital bank, it could take like 9 months to a year for a digital bank.
And capital needed?
Capital needed, for example, for a digital bank, I think it's 2 million euros, about $2 million. I'm sorry. For an investment firm, it depends on what services you're going to be offering, but it can be anything, anywhere from $20,000 up to $500,000 in capital.
And in which jurisdiction are you allowed to offer services if you're regulated there?
Whatever you want, provided that you're not going to be getting provided that your regulator in the DIFC or the DGM is not going to be getting calls from
the other regulator.
Through the other regulator, right? So there's no restriction, right? They don't tell you that, look, you can only offer the service in these countries. They tell you cannot offer services in mainland UAE, right? Now, can you offer in Europe? It's through reverse solicitation, yes. What does reverse solicitation mean? It means that I don't go to Sigma Live, which is 100% Cypriot news website, and put banners there saying trade with Yiannos FX regulated from the ADGM, right? That's direct marketing. But if, however, someone finds me from that person is in Europe and basically they sign up, you know what? I can probably do it. It's usually the regulators are not really going to bother unless you start having complaints and you start having problems and you start have, a huge amount of people that are going to be flocking to a specific jurisdiction. So it's, you have this concept of the risk-based approach, right? So provided that you're not doing anything wrong, they don't have any complaints, nobody's going to bother you.
Well, I guess not the same applies to the US. That is categorical. No.
The US, nobody wants to enter the US exactly because things are very, very dangerous there. Dangerous because you have a lot of litigation. You can have different, you can have state laws, then you can have the federal laws, and things change so fast over there, right? You had this, Coinbase had trouble, Binance had trouble, and then all of a sudden Trump comes and now everybody loves crypto, right? Before you had the SEC chairman that hated crypto, but they liked FTX, they liked things are not very clear. Why? Because you don't have clear regulation. So we go back to the first thing that I mentioned, right? Good, clear regulation. It's a facilitator. It's not blocking anyone.
Do you have some information to share about what's happening with USDT?
Yes, absolutely.
Yeah, because there's definitely an impact in Europe. Give us a rundown. What's happening with USDT? Is it still available to be used in the EU? Is it limited to only the US? What's happened there?
Okay. Now, in crypto, you have this concept of stable coins. Stable coins are coins which their value is derived from a specific asset, right? And in this case of USDT, is derived from the US dollar. So basically, one USDT is the value of $1. And that was fine up until 1st of January 25, when MiCA came into place. MiCA said that, look guys, if you want to be circulating any kind of digital asset, any kind of currency, cryptocurrency in the European Union, this needs to be regulated. How we're going to be regulating it? It will depend on what type of currency of digital asset this is. If it's going to be a digital asset which represents ownership in a company, it's going to be regulated like a share. It's like shares, right? If it's going to be representing utility, what's utility? The miles that you have from airlines. I know that Wizz Air, for example, doesn't give miles, but Emirates, British Airways, they give you the miles, right? That gives you a utility. If you have 100,000 miles, you can get something, right? So those are utility tokens. So they give you something. Now, if you want to have stable coins, you know what? Here, we're going to be a little bit stricter, right? Why? Because effectively, it's as if you're simulating currency. You're creating a digital coin, a digital asset, which is pegged to the euro, to the Swiss franc, to the pound, to the US dollar, which means that this is effectively currency, can have a significant impact in the financial system. So we're going to regulate it a bit harder. So we're going to be asking you to go through a lot of motions to get the license for that. You have to get the license from Frankfurt for the European Central Bank. And then at least 60% of the money that you're going to be getting from the issuance of this token, it has to be sitting in low-risk, high-liquidity financial instruments in European Union banks, right? It makes sense if you think about it, because they want to make sure that, because otherwise someone could just issue $5 billion worth or euros worth of coins, and they just take the money and just, piss it off in risky investments, right? Yeah. So effectively, they're saying that you need to control that. Now, USDT said, you know what? I'm not really comfortable doing that. Even though the founders of USDT are Italian, right? So they're European. They said, you know what? It's not really my thing. It's fine. I mean, I respect you guys, but I'm not going to do it. So what I'm going to do, I'm going to go to Dubai. I'm going to help the Emiratis create their digital dirham. So I'm going to create the USDT, but USDD or something. I don't know how they're going to call it, or ANDT. Yeah. Tether, but on the Emirati dirhams. So I don't really care about Europe. So they have effectively a grace period, until which they will need to delist it from European exchanges.
The USDT needs to be delisted
from any European Union MiCA compliant crypto exchanges, right? Now, will that mean that you're not going to be able to keep it on your wallet? We'll have to see. I don't think that's going to be an issue, because basically, even if I have a wallet with a European crypto exchange, if someone sends me a USDT and this person is my sister who lives in the United States and she bought it from an exchange in the United States and she sends it into my wallet, I don't think that's going to be a problem, to be honest. So basically, it's going to be delisted. It's not going to be freely available to people to buy it in the European Union, but I mean, you're not going to ban it 100%, right? So this is the story. So now the stable coin that jumped to take the place of Tether, of USDT, is Circle. And funny enough, Circle is owned by Americans.
Can you spell that out?
Circle, just like a circle.
Circles. Okay. CRCLE.
Yes. Circle. So it's USDC.
Okay.
Instead of USDT, it's USDC. So the Circle.
I always thought USDC stands for USD coin.
No, it's USDC is Circle.
Oh.
That's the next inline stable coin.
And is each USDC equivalent to $1?
Yes. And they jumped into the opportunity, and they got regulated in France. So basically, they are the biggest stablecoin, which is MiCA compliant right now.
So, okay, but how did that come about? What did Trump do for the Italians who founded USDT decide to not, or what happened there? Is it the regulator how did Trump impact that?
No, Trump didn't really impact it.
Okay.
No, this was basically the decision of the Tether guys, of the people that founded Tether. What Trump did, basically, Trump gave effectively a push to the adoption of crypto. In the United States, by openly supporting it, by ensuring that basically the SEC chairman was changed. So basically now who was a big opponent of crypto. So what Trump did is that he stopped the prosecution and the persecution of the crypto guys like Coinbase, Ripple, Binance, etc. Right? Now, up to a certain degree. So he changed the regulation, and he facilitated the adoption of crypto into the mainstream financial services system. So basically now, for the first time, you have better guidance, for example, for tax treatment of crypto in the United States than in the European Union, which is it's strange. I mean, for someone like me who comes from regulation, that was never the case before, right? I mean, but because you had MiCA, the market in crypto assets, which was the European Union regulation for crypto assets that we're so proud of, and now, I mean, all of a sudden, I mean, the Americans are pretty much taking the lead when it comes to, framing in the traditional context of business regulation, meaning taxation, accounting treatment, etc., how crypto should be treated in a business environment.
Mm-hmm. I have another question here, which I guess is more a blockchain related question to these crypto. So my question is that the USDT and USDC, which you mentioned, which are pegged in terms of value to whatever the US dollar is. And so if you compare, $1 with another currency or some other asset, accounting for inflation and how the central banks where they print money increases deflation, dilutes the currency, all of that stuff that applies to the fiat currency as we know it. Now we're talking about digital assets, and an important factor is how much is in circulation. So we've almost got a parallel, let's call it, currency that's been created, which is digital. Is the amount that circulates in USDT and also comparing USDC, is it equivalent to how much is in circulation of the fiat currency? Have they pegged everything to it, or
no.
How does it work?
No. For example, I mean, I think you have something like 10 or 20 billion in value for USDC, and then like 60 or 80 billion in value for USDT.
So you're talking about market cap.
Yes.
And when we talk about values, how much is held by individuals around the world? Is it only so much?
Yes. Yeah, it's not so much. I mean, it's even... I mean, the total amount of value which exists nowadays in the digital assets, I mean, it's nowhere near like a fraction of the total amount of fiat money in circulation, right? However, a lot of those things are scams, with the exception of a handful, but not a handful in the context of 20 or 50, but a handful in the context of the overall amount of crypto which has been created. A small fraction of it are the legitimate ones. You have your Solanas, you have your Ripples, you have your Ethereums, and then you have Bitcoin, which is in a class of its own, right? And this is why, I mean, it's the reference point for everything as a vehicle of transferring value, right? Whereas pretty much other coins have some sort of utility, have sort of a technological utility.
Right.
So basically, it's like pieces that you can build blockchain applications on.
Right.
Blockchain applications are ways that you can store information onto the cloud in a way which is not centralized, and in a way which it's kind of communally verified and triggered to do something specific, right? So these are very advanced applications. So most of these coins, like Ripple, especially Ripple, Solana, Ethereum, etc., these are utilized for this kind of application. So they don't only have a value as a coin, they effectively have a utility as a technology facilitator as well.
Right.
But then you have your Melania coins and you have your Trump coins, which but
there
still,
are thousands.
But it's like more than $1 billion in value right now, market cap on the Trump coin.
Really?
Yeah. And it was...
It crashed at some point, right?
The $2 billion is after it crashed.
Jeez. Yeah. It is a very volatile market. None of what we're talking about here is market advice. We're just giving information.
No, absolutely. I mean, it's...
And I'm interested to hear the fact checking, the comments. Please feel free to comment. We've been talking for over an hour here. This is 1.5 hours already.
Wow, it's amazing.
We ran it again. We didn't speak about the same things as we spoke about the first time.
It was totally different, right?
This is a completely different one, but I mean, I enjoyed it the same. It'll always be a mystery what we spoke the first time. Those got lost somehow.
It's for us to know and for everyone else to guess, right?
I do want to thank you for your time again. Please, let's do some closing comments here. Let the audience know. Just a reminder of the entities. It's Pnix Hill and GRC.
GRC Partners.
GRC Partners. Where can they find you? On social media, wherever it is. Let's do some closing comments.
No, absolutely. Yeah. So it's the website is grc.partners. And I'm pretty active on social media, especially on LinkedIn. So basically, I post regularly. So anyone that wants information, they can, if you just Google my name, I'm sure that you're going to find a lot of things there.
Yiannis or Yiannos Ashiotis?
It's Yiannos Ashiotis. Ashiotis is spelled with the Ashiotis. You might find some things that I'm not very proud of, but they're still out there in the on the cloud. But it is what it is. In regards to Pnix Hill, the website is Pnix, PNYX, Hill, HILL.co. They can always find us there. They can find more things about what we do. If you want to reach out, get more information about whatever, I'll be more than happy to connect with you guys.
Excellent. Thank you. And that's a wrap. See you next time.
Thank you very much. Take care.
Thank you.